Mode.
Hey everybody, Preston Brent here with our Trader User Group, a weekly roundup. This is for the trading week ending October 7th, 2016. What I've got on the screen here is the E-mini S&P 500 futures. And let me just clean the screen up for you, take some of my price levels and trend lines off. And let's just kind of focus on some basics here. I think everybody this week was expecting the markets to really begin to define a trend with the jobless numbers, so job claims and the employment rate. Employment was up a little bit. Job numbers were below expectations, yet the markets didn't crater, started to move higher, and then it kind of reversed and went a little bit lower. But net, we really haven't gone anywhere. I think a lot of traders were hoping that a trend would be established either to the upside or to the downside. We also had a number of Fed officials come out today and talk, and they all are basically, I think the market and price action is pretty much resigned to the fact that right now I think it's about 66% chance that we're going to have a rate hike in December. And assuming most of the numbers don't change, that's what we're probably going to see, this rate hike in December. There's about a 20% chance of a rate hike November 2nd, but I don't think anybody is anticipating the Feds are going to hike the rate 6 days before a presidential election. But be that as it may, today was not enough to really get the markets going in any one defined trend. And let me just show you guys. You can see on this daily chart here where I've got this pattern set up like that. We still haven't broken out. Many people were thinking that we would probably break out either to the upside or a downside breakout here and we would go down. And we haven't done that yet. This is a symmetrical triangle where both the upsloping and downsloping lines meet in the center, and it's a flat line like that. You can see we've entered this from the downside up. So a typical break in this kind of pattern would be to the upside. Now, what I've been telling our members is I think it's going to depend more so on the earnings coming up, starting next Tuesday after market officially with Alcoa kicking off. But then the earnings really get going towards the end of the week into the following week when we get a lot of banks that are going to be reporting, and we get some big hitters coming into the S&P and the Dow that are going to be reporting their earnings. I think this is what's going to be really closely watched. Keep in mind our trailing 12-month PE ratio in the S&P is around 24, 23, 24 area. The longer term average is in the high teens, 17, 18, somewhere in that area. So we're over that right now. But why are we richly valued? We're richly valued because we're the only economy, global economy, that seems to be making some headway. And money is coming into the United States, so it's putting a premium on the U.S. stocks. And as I said before, there's two things that drive a share price, stock price. One is earnings per share. That's one. And then the second thing is the interest rates. These two things combined define risk, they define reward, they define where the money is going to go. Now, there's a lot of subcomponents, but this is at a very high level. Earnings per share has been down 5 quarters in a row, year over year. And yet the interest rates are so low that there's no place else for money to go. We got over 12 trillion, that's capital T, in money that's in negative interest rates, below zero, right? I mean, that's just unbelievable. So money is forced into the equity markets, and we're getting a lot of money coming in from Japan. We're getting a lot of money coming in from Europe. And it's coming into bigger dividend paying stocks. It's coming into utilities. We're seeing some pop in energy, which is, we've seen, I think, 5 or 6 days in a row of oil futures moving higher on the hopes and the backs of some kind of OPEC deal, but I'm not really counting on it per se. We've also had 5 weeks in a row of surprise EAI reports out of oil inventories being drawdowns. But again, as you guys saw today, the minute oil starts going higher, you're seeing more rigs come online, pumping more oil, which in turn puts more supply out there. And as long as demand stays relatively soft, meaning a slower global economy, you're going to see oil kind of range bound, which is what we're trading right now. And I've got our members trading short ratio strangles in the oil futures market. Now, looking at this chart here, we're still in this mode right here. I believe we're going to break out and we're going to establish a trend. I can't tell you right now which way. The odds favor a break to the upside on the pattern, but you know how that goes. You got to wait for a clear break. You got to wait for a possible retest, clear the highs on the break, and then you follow the trend. If we break to the downside, the first key area that we're going to want to watch is 2100 right here. Okay, that is going to be our first major test. This is on a daily chart, guys. So if you're trading, 90 days out, 2100 is a key level. Right below that's the 200 EMA, but that's a key level. Then the Brexit vote right down here at about 1982. That was the Brexit down move when we went lock limit down on the S&P in one day. Actually, overnight hours into the next day, we moved from 2120 all the way down to 1980. A big, huge move down. So this will be our next key pivot right here. I think this pivot is going to hold up. This pivot right here, we could take that out if earnings do not come in as expected. But this is kind of where we're sitting near term. I also told our members that if we do break out to the upside, our 21, I think it's 2192.50 is our all-time highs. We'll take that out, probably move up over the 2200 up to about 2230 to 2250. So we've got a lot riding on these earnings that are coming up, and it'll give analysts a really good shot at just how strong is the U.S. environment, given the stronger dollar that we've seen over the past couple of weeks on international earnings, weaker currencies globally because all those currencies are in a race to the bottom. The U.S. is about the only economy right now where we're talking about taking fiscal stimulus or monetary stimulus off the table, not putting it back on the table. So this is the chart as I see it right now in the S&P 500 futures. I put all of my indicators back on the screen again. You can see here we've been following and tracking right into my resistance zone up here as an Elliott wave 5. We had the bearish divergence. Everything moved out very nicely. So now we're stuck in this tight range. We got a little bit of a support area just above the 2100 area, but outside of that, we're going to watch this and see how this thing shakes itself out. Okay, so that's the E-mini S&P 500 futures. If we look at NASDAQ, you can see in the NASDAQ it is hovering near the all-time highs, way off, much better than the S&P 500. But the thing that concerns me about NASDAQ right now, and again, earnings are going to drive this. You can see we've got this huge bearish divergence. We call it a bed that is set up on the NASDAQ futures. We haven't gone anywhere though. We were looking for a breakout one way or the other. We haven't got it. With this 3, 4, 5 leg, in my mind, with that bearish divergence, I believe the odds favor a break to the downside, not the upside, at least on the near term. We typically, after a 3, 4, 5 pattern, get something like an ABC pattern. And depending on the pivot points that are defined by these ABC legs, is kind of will help give us an idea of where does the market really want to go as we go into November and December. So this is kind of, NASDAQ is kind of one of the stronger ones of the bunch. And then of course, if we look at the, the Russell futures and see that it did not have a good day today. NASDAQ held up a little bit better. But again, you can see we're near the highs, all-time highs. But again, we got the bearish divergence here. We're sitting right on the 50 EMA. Russell futures indicate it wants to go lower as well. Now, bonds have just been really having a hard time of it. If we look at the bond market, and we take a look at what bonds did today, you can see here that we did pretty much what I had suggested to our members that we would do. We were riding this channel all the way down, and every time we would get to the top of the channel, I was suggesting that, at these points is where, we want to just pick up shorts, right? And just be short sellers in the bond market. We just, when you get up to these levels up here, hold shorts. Now, down at this level here, I said the ideal would be to come back up in the channel, and that's what we did. And then we, we sold it, and then boom, we come down and we made lower lows. But if you'll notice, if the bond market consolidates here, holds and starts to move back up in the channel, we're going to get a divergence to the upside, and we'll see another ride back up to the top of the channel, at which point I'm going to want to shift our bias again and expect another move back down. Now, if we break this channel and go higher, then this pattern would null itself and we would follow another one. But right now, this pattern has had, 1, 2, 3 really good signals, 3 separate short signals on getting short the bond market, and you would have had a higher probability of being successful. Now, the other thing I'm going to show on the bond market, or the bond chart here, bond futures, is if you look at it, you can see this price over volume. You can see all that volume right there, and this big, huge amount of volume right here over price, right? So you can see all this volume that comes out here, all this volume right here and right here. So this is going to serve as a support zone for bonds. This is going to serve as a resistance zone for bonds. So we're going to kind of be stuck in this channel until we get some news one way or the other that's strong enough to break it down or break it up. Okay, now the odds favor, we don't have a trigger yet, but if bonds consolidate and starts to move up, then I'm going to be looking for a move higher in the bond market to around the 167 area, and then if it starts to roll over again, then we'll just take the same pattern we got there, there, and here, and we'll just take that same pattern and we'll play it to the downside. So that's kind of how I'm looking in the bond market right now. And then, of course, over in the currencies, the British pound just got decimated. If we look at the British pound here, this is a daily chart. You can see here we came down. My target that I've had on here following the counter trend move post Brexit move up in this area here, I said roughly about 126.50. Roughly is what I said. Now we finally came down, we hit it, but then overnight, last night, we had this huge down move that took us all the way down to lows we haven't seen since 1985. $1.2034 in the British pound. Longer term, I'm bullish the pound. Short term, it is going to be extremely choppy, and it's just, I don't think it's worth the downside risk. If I put this on a 1-minute chart, you'll see what I'm talking about. Looking at this 1-minute chart here, let me just get it. Let me zoom out on the British pound here. Here's the move right here. You can see if you were long and you wanted to try and get out in this, you did not have time. It literally, in 1 minute, and really this is an anomaly here, it was even less than a minute because I was watching it when it happened. New York time, it was about 7:05 p.m. It literally went from 126 down to 122 before you could blink an eye, less than 10 seconds. And then it hung out here for 2 minutes, and then boom, it had another one down here. Now what happened, I've seen a lot of speculation, but net, when you have a very illiquid market, which the British pound is in overnight hours, and you get some big sell orders that come in, you're going to get ugliness, and that's what we had here. And then obviously, once the sell orders finished, it flushed out a lot of sell stops down below here. A lot of traders that were trying to play a bounce to the upside, so they were long. So they had sell stops underneath the market. It flushed them all out. So in many respects, you can see here, if I just really zoom in a little bit, you can see this sideways pattern since that Brexit vote, right? We've been pretty much, or since that really crazy move right there, we've been in this range just like that, all right? And that's normal. It's the 50% of that move is somewhere right in this area here. Typically, you'll have a move here. Then, once it wears off, you'll do one of these things. You may come back down, test it again. Ideally, I'd love to see a second test before going higher. Right now, right in that area there, I mean, flip a coin, up or down. Longer term, we're going to want to play it bullish. Short term, I don't want to touch this thing. It's just really crazy. If we put it on a 2-hour chart and kind of bounce out, you can see here, we don't have a signal here. There is no signal to go long. And in fact, after this, what it's going to do, it's going to flush out a lot of traders, and in a kind of a strange way, it's going to settle the market down here. And we'll settle in this wider range from 126 down to probably around 122, 4-point range, 4 cent range, probably for a while until we can start working our way back up, okay? But not without some down moves. So we got to be very careful in this. The Japanese yen, where I've been suggesting shorts in this market here. Let's put it back on the daily. You can see here on the daily with the yen. And we've had several areas here where I'm saying, okay, you know, putting calls on, short calls up in this area made sense to me. The odds, and we've been in this area here where we just can't seem to break out of it, favors the yen to come back up. If we can get back up here again, I'm going to suggest to our members that we do some more shorts again, right? Remember, the yen is a place of safety in global stress. We've had this repeating bearish divergence move on the MACD, so I kind of like this to the downside. If we look at gold, well, gold, as you guys know, got taken to the woodshed, and we broke out of a key trading box. And I said the odds favored a break to the downside. And then once we broke that box, right in this area here, it was a very fast move. Boom, 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 just like that. And we're sitting below the 200 EMA. I said the next stop down is around 1200. I favor us seeing 1200 before we see 1300. At least near term. Longer term, I think we're going to see it move higher, but not right now. If the Feds do hike the rates, that'll be good for another 20 or 30 point move to the downside in gold, especially with no inflation on the horizon. Oil, well, like I said, it's all on the backs of OPEC. You can see this move higher. We've moved right into my target zone. I had called 51, roughly about 51.20 way back over here. Back over in August, I was saying that the 51 area was our next target. And we've had, granted, a number of fits and starts here, but I see us moving back lower. Now, there is very, very little. If we do get a cross here, let's say this thing crosses and it goes down, there is almost zero bearish divergence, what we call a bed. There's almost zero divergence here. So any move down is going to be short and sweet. We'll probably make a new move back up to try and test this again. We might even take out the all-time or the 2016 high of 51.67 and move up to a 52 to maybe a 55 area. But I think it's going to cap it at that before the end of the year. I am a person who believes OPEC will not be able to do a deal and is going to put some downward pressure on oil. We have had inventory draws in the oil, like I said, over the past 5 weeks. Every week, everybody's been expecting inventory to grow, and it's fallen. I don't know why they can be so far off on this kind of thing, but they are. But either way, we're trading some short ratio strangles in this thing, and it's working out well for us so far. So that's the oil market. Another one that had a great move today is nat gas. You can see nat gas just really exploded off of this range. We still got these bearish divergences here, so I'm more interested in looking at shorts than I am long in nat gas. Now, it moved a lot since October the 3rd. We moved from 286 all the way up to 322. That in natural gas, that is a big move, or 321. That's a big move, folks. Selling calls into this strength makes sense to me because I just don't see nat gas getting too much higher with the inventory that we have. I think part of this move is related to the hurricane down in Florida coming up the eastern seaboard of the United States, and fear of a nat gas shortage with all this stuff. But I think it's going to not pan itself out, and you're going to see natural gas come back down again. So we're going to be looking at some trades here, some short calls in the natural gas market. In the ag market, if we look at wheat, which is the one I'd be more interested in, we're hovering down here at the lows. We've got a little bit of a bullish divergence. I think the lows, it may have been printed. Even if it hasn't, I don't see too much lower lows in the wheat market. If we look at corn, corn is the same way, but it's a little bit off the 2016 lows here. I think there's a little bit more downside in corn. If we look at soybeans, you'll see with soybeans, we're still in the green for 2016 with soybeans. But I do like soybeans to the upside, as with corn. Seasonality wise, we're coming into that part of the season. All right, so that's it. We're doing some other things in meats and softs, but I want to give you guys a quick update. one other quick thing, and I'll let you guys run. If we look at volatility, volatility finished up today, 64 cents. You can see here, though, we're still in zone 1, which is VIX underneath 15, which says for our credit spread strategies, you do not want to put more than 25% of your capital into credit spreads. Okay, I mean, that's just kind of how we're going to play this. All right, everybody, have a really great weekend. I hope everybody down in Florida and up in Georgia and South Carolina, North Carolina, you guys stay safe. And I will see our members Sunday night. Take care, everybody. Ciao.